Welcome to the latest episode of The Financial Frontier. I'm your host, Patrick Camuso. Today I'm joined by Joe Ciccolo of BitAML and Executive Director of the California Blockchain Advocacy Coalition. Joe is on the front lines of shaping bills that will decide how crypto is regulated at the state level. And we're going to cover a lot of ground in discussing some of these topics here today. So, I'm very excited to guest Joe. Welcome to the Financial Frontier. To briefly get started, do you want to give us a little bit of your background? What you do at both BitAML and CBAC, and just a general overview for listeners who maybe aren't familiar with you. Although I will point out that Joe is a returning guest and a friend of the podcast and of Camuso CPI. So, Joe, welcome to the show.
Thanks, Patrick. Always a pleasure to be with you. Absolutely happy to introduce myself. For those I've not yet met, my name is Joe Ciccolo. I'm the founder and president of BitAML. At BitAML, we provide regulatory compliance consulting services to crypto exchanges, trading platforms, and other applications and protocols. Our focus there being on AML, as our name might imply, but also as well on consumer protection and fraud detection and cybersecurity and other elements of risk management. We've been doing that for 10 years. My background is in traditional bank compliance in various areas of risk management, from AML to fraud, and even a little stint doing corporate due diligence. The other hat I wear is I'm the executive director of the California Blockchain Advocacy Coalition, or CBAC for short. We're a 501c6 trade association representing the interests of crypto, Web3, and blockchain here in the great state of California. And that takes the form of representation before the California legislature, the governor's office, various state regulatory agencies, and other interactions with policymakers, again, at the state level here in California.
Great. So this is why we're excited to have Joe on as a guest. He is working both as a practitioner and directly with regulators, so he has a lot of insight to offer. So, Joe, a little bit about CBAC, which is the California Blockchain Advocacy Coalition, and how are you in that coalition shaping policy conversations in California? And why do you believe that this state level advocacy matters so much for crypto regulation?
Absolutely, the state's very important. It's easy to maybe get distracted and excited about what's going on in DC with the Genius Act and perhaps with the Clarity Act if that moves forward, and other positive developments for digital assets at the federal level, particularly under the Trump administration. So while that's exciting, there's a flurry of activity at the state level, not just here in California, but across the U.S. So legislation is a lot easier to pass, particularly in states that are dominated by a single party. So it's no surprise, I'm sure, to your viewers, that California is a sapphire blue state. So it's particularly easy to pass, particularly when you have a legislature that's dominated by a particular party, and then of course the governor is a Democrat as well. Here at CBAC, we've been involved in shaping that legislation by interacting with different members of the legislature. While they may be dominated by one particular political party, there are nuances to that party, and every politician is representing their district, as well as the state of California, but very focused on what is most meaningful to them and to their constituents. So being able to tailor that message and by unifying around common themes like protecting consumers, but at the same time advocating for innovation and for legislation. So very important here in California, but as well across the U.S. to engage locally and bringing together, as we are, trade association, the various different members of our trade in the crypto space, whether that's a large exchange. We represent the likes of Coinbase and Kraken, but we also with folks in academia, nonprofits, and blockchain development companies that are very modest in size and scale. So being able to represent that diverse kaleidoscope of Web3, we were focused on innovation, which we pride ourselves here in California, but also we all pride ourselves on leading the way in protecting consumers. And those concepts aren't mutually exclusive. In fact, we've had a great deal of success in messaging on that with respect to legislation here in California.
Absolutely. And like you said, there has to be a balance that is struck between the two and the coalition-based approach, because you work with a lot of different groups like your outline. I think that lends very well to this because you're able to bring a lot of different groups to the table. So, why did you design this with a coalition-based approach, and what advantages do you think that gives you when you're engaging peers?
I think it again gets to what you were talking about earlier, and really showing the industry for what it is, a collection of amazingly talented folks from literally all over the political spectrum, but more importantly, that bring their amazing talents and gifts and have something to offer for this industry. And as well, it takes distraction away from some of the Georgia terminology we hear from some politicians, crypto bros, or saying, well, it's just these large and they want to dominate, and they're shaking their tin cup looking for some sort of handout. Obviously, that is not the case, but it's quite easy when it's led by a large company to think that perhaps they want something, versus a coalition that says, here's what's meaningful to us as a collective to the ecosystem. And there are, of course, instances where some of our members are more passionate about particular pieces of legislation than others. And that's great, right? And we're able to tap into their knowledge and speak effectively on their behalf. And then you have to realize, too, that companies are a little hesitant to put their name and their branding out there, particularly if they're fighting back against a piece of legislation. The optics may be negative, and so there's an opportunity to work with a coalition of like-minded folks to help propel that message forward, and not necessarily put themselves out there in what is perceived as a position, particularly, again, if you're going against a piece of legislation or going against the author of that particular piece of legislation.
Absolutely. So let's get into some of the legislation that you've been focused on. I know one thing that you've been deeply engaged with is the DF rulemaking. Maybe can you start by giving us a brief explainer on what DFAL is, and what's been some of the most meaningful wins so far, and where are some of the biggest challenges related to this? Sure.
So DFAL or DFAL stands for Digital Financial Assets Law, and it's a combination of two bills. Bill 39, which largely deals with the overarching licensing oversight of crypto financial institutions, as well as coins, and we can talk about that individually. Stablecoin issuers being licensed under that. So that's one piece of legislation. The second piece of legislation that's part of is SB 401. And this piece of legislation is very narrow cast and aimed at ATMs or kiosks. It has specific measures like $1,000 per person per day daily limit, mandatory receipts, and fee caps on transactions in the interest of protecting consumers. So those two bills, AB 39 and SB 401, are to form DFAL. And in fact, to our regulator's website here in California, the Department of Financial Protection and Innovation, they do a job of explaining DFAL and pointing to the specific elements of both those bills and how they come together to form that mandate and form that concept that we know of as DFAL.
Very nice. And then another bill that's been on your radar is AB 1029, I believe. And this really to me because it requires public officials to disclose crypto holdings of over $2,000, I believe. And this puts digital assets on the same footing as more traditional assets in terms of disclosure rules, such as stocks and real estate. What does this signal? What type of signal does this send in terms of the government's viewpoint on crypto's legitimacy? And does this have any impact when it comes to trust in those, crypto conversations or conversations where everyone just thinks we're basically trying to pump our own bags? Does this help with any of that as well?
Sure. Yes. To step back, AB 1029, the bill effectively updates existing rules in California for disclosures for public officials, including elected officials and those that are serious candidates for office. So they're having to disclose already their real estate holdings, any business ventures, sources of income, and other information. For those in California, it's referred to as Form 700, and it's very comprehensive. But historically, there's not been a reference to digital assets since this went into play several years before the advent of cryptocurrency today. So what this bill then says is, hey, if you're holding digital assets of $2,000 or more, same for stocks and other holdings, you would have to disclose that in your disclosures to the state. So for us, it's great. It means that crypto is viewed in the same conversation as stocks, bonds, and other investments. So from an industry perspective, we're very happy to support this. It was authored by Avelino Valencia, Chair Valencia of the Banking Committee on the Assembly side of our bicameral system here in Cal Crypto. He's a Democrat out of Anaheim, and a very strong supporter of the crypto space. The initial push was to be more transparent among those that are legislation. And I think that some of the Democrats saw this as an opportunity to maybe needle President Trump and his involvement in the crypto space, and maybe there's a political opportunity to that. But I think we all can agree, importantly, that this is about bringing transparency to government. And as we mentioned before, our group, our coalition, was very happy to support anything that brings transparency to government and at the same time, simultaneously, mainstreams digital assets.
So, you work with investors and founders. You have this coalition-based advocacy group, and then you're also talking to legislators. And obviously, the DFAL compliance is going to be something that is a big consideration across the board. What is your perspective on that? And when we're talking about exchanges and founders, are they prepared to comply with some of the requirements related to this, or do you think there's going to be some sort of compliance cliff that they may be approaching related to the stipulations in here?
I don't think so. I think speaking for the crypto ecosystem, one of the number one questions we get about DFAL is, where can I find the application and when can I apply? So I like that level of enthusiasm. But if you look at the actual bill, recall that there are two bills that form DFAL. AB 39 is the bill directly engaged on licensure and oversight. If you look through that, there are a series of very specific line item requirements. And to my read and my compliance background, there's nothing there that's surprising or from out of left field, nothing that we haven't seen before in other states. California may be in a little bit more of a intensive box, so to speak, in terms of its requirements. But I don't think that there's anything in there, again, that exchanges haven't seen already if they've applied in other states or have a license in other states. So I think that puts us in a great position. I think being now in 2025 and soon to be in 2026, we've seen a decade plus of commercially viable crypto applications achieving license. So having that experience and knowing what's required, and again, I don't think California sought to recreate the wheel here. I think that they took some of the best elements of different states, and yeah, there are some requirements again that are at the higher end of the requirement spectrum. But certainly, I will add within AB 39 is a provision, and this came about through rulemaking as well, or was confirmed through rulemaking, I should say, that if one was to already hold a BIT license in New York, in California, they would be issued what's called a conditional license, which essentially means you may continue to operate business, and we'll get back to you later. And the thesis behind that from the legislature, the bill's author, Chair Grayson, he chairs the financial services and the banking side. His thesis and thought process behind that was, well, if you have a BIT license, you achieve the high watermark-based approach, we can come back to you later, and this will allow for our state regulatory agency, DFPI, to be able to focus on applicants that maybe present arguably a little bit of a higher risk inherently because they haven't achieved that benchmark. So I think those that have a bit license are in a great to be able to hit the ground running in California. That's certainly a big advantage. But I think in a way it does again sort of open up the field a little bit more and loosen up that sort of runway for others, and hopefully we don't have a line at the door of applicants, and we can we have the IT infrastructure, and we have the support system being created at DFPI to process that. I think the pressure is on the DFPI. I think industry, again, having a decade plus of experience, a lot of the folks that are applying have seen these requirements before. They've read through the legislation. They are ready to go. I don't think that, again, there are any surprises. It's going to be a matter of execution and doing our part as an industry to keep and foster strong dialogue with regulators, and at the same time, regulators holding up what they've insisted upon their end is that they'll be able to facilitate an onboarding process that's not lengthy and one where there's deep direct engagement, with the applicants.
Yeah, and you can really see that, what you're highlighting is that founders and exchanges, they are welcoming this, and they want the clarity and, these clear frameworks to operate within. So, this is great. Now, to speak a little more to this and just like on the legislative process overall, how does this work in California, maybe for listeners that aren't that deeply familiar with the legislative calendar and what that looks like on a yearly basis? Can you give us somewhat of an overview of that and, what you're anticipating for, Q4 and then obviously going into next year and it's like on your schedule?
Sure. The legislative calendar is pretty consistent. I mean, obviously it varies each year depending upon where the days of the week fall on the calendar, holidays, and other aspects of the Rules Committee. But essentially, our legislative cycle goes from January, just following the holiday season, January into about mid-September. And so usually the first month or so, there's orientation, bringing in the new class of elected officials, ceremonial photo ops and other engagements, tours of the Capitol, which is fantastic, bringing in that transparency that we like to government. Then as the legislature gets going, generally around mid-January, there's a small window for when bills have to be formally introduced. And so usually the cutoff is about mid-February at the latest. And in that time, any bill that would be considered to be introduced, and any date after that, one cannot introduce a bill unless it's an emergency measure, and there's a whole detailed process to that. And then from that time forward until the end of the session, this year, 2025, we ended on September 12th. So mid-September, when it does end, there's a last date for all bills to pass. Because there's so many bills, we usually average somewhere between 700 and 1,000 bills. That's very, very high for states. Yes, California is the largest state, but even if you were to break that out in per capita, it is magnitudes larger than the next state in terms of the number of bills that are passed. And so the governor and his staff have an unenviable task of sifting through 700 to 1,000 different bills, anything ranging from air to law enforcement to crypto, wineries, you name it, right? They have to parse through all those bills and make a decision within a very, very short window. 30 days seems like a long time for those of us waiting for bills, but I would imagine at the governor's office that 30 days goes by pretty quick. And so that's a little bit of a sneak peek of the legislative calendar. There's generally in the summertime for our elected officials to go back to their districts. Some of the staffers, of course, getting some time off as well. But yeah, it's a pretty consistent calendar year to year, and we're looking forward to seeing what the governor has in terms of his message, what he's signing as we're currently, as we speak, the waning days and weeks of the.
Absolutely, and we'll be sure to have you back on as a guest in Q1 and throughout 2026 for legislative updates, because I'm sure there will be many as we move into next year and we start to see this calendar unfold. So the listeners will be very interested in that, and I'm very excited for that as well. So now, taking a step back, like you said, California, one of the biggest economies and the biggest state economy. Could their approach, the approach that is forming their approach, they're starting to shape it right now with the help of you and others, could that approach start to serve as a framework for other states or for federal policy? Or do you think that there's distinct differences of the two and there's going to be divergences, or like what's your perspective on that?
Sure, I think it's an overarching licensing regime. I think California is a little late to the party compared to the other states, so I don't think, at least structurally, I don't think there's going to be any sort of emulation of that within the other states. However, there are elements of legislation here in California that I think other states will be looking at and already are. In particular, I sort of teased this out earlier, but in AB 39, there is a separate chapter, Chapter 6, to do the oversight of stablecoin issuers. And the first governing body in the United States was California that tackled stablecoin issuers. So before the Genius Act, well before the Genius Act, California decided to set forth through legislation and policy matters of overseeing stablecoin issuers. So I think we'll see other states do that. Whether or not that closely aligns with Genius, and there's some Genius, so we don't want to get too ahead of ourselves, but I do think that the states are going to look at elements and ways in which they can have some oversight of certain aspects of stablecoin, particular stablecoin issuers. The stablecoin market, as I'm sure you know, Patrick, has taken off. And I think there was 2024, I believe, where stablecoin volume had overtaken Visa and MasterCard combined. That is a market force that can't be ignored. So we would have it no other way. I think states are discussing, does it make sense to have legislation with Genius? I don't know. I'll leave that up to the lawmakers to decide in their respective states. But at the very least, it merits a conversation. Other elements have already been emulated from crypto legislation here in California. So if you look at SB 401, the other half of DFAL that regulates kiosk operators, that $1,000 limit has become a negotiating talking point within the other state legislatures that are trying to rein in their oversight operators. And so some states, there's different limits, 2,500 in some states. I've heard, some states have a new customer and existing customer threshold. But the idea of having these sort of firm transaction caps, fee caps, disclosures, receipts, California and Connecticut arguably going sort of toe to toe because the legislative cycle had passed sooner in Connecticut, but I do believe that California was to at least structurally consider direct oversight of kiosk operators independent of licensure, although you are still required to get a license in California or a kiosk operator. The elements of the DFAL that related to kiosk operators went into effect immediately in January 1st of 2024. So have already been in place. In fact, we saw our first enforcement action from the DFAI here in California. It was aimed at a kiosk operator in particular for alleged violations of $1,000 per person per day daily limit, among other elements of that finding.
Interesting. So, I agree with you. Regulators from different jurisdictions are definitely looking for examples and nations, and California can serve as a great example. Some of which you outlined here. So, looking ahead into 2026, we've outlined the legislative calendar. What sort of substance are you expecting next year in terms of potential legislative changes? What are you really anticipating? I know maybe you've touched a little bit on SB 97, maybe touch a little bit on that, and just overall anything else that you really see coming down the line next year.
Sure, yeah. So you mentioned first SB 97. So this bill is called bill or trailer. It was our intention, industry working hand in hand with Chair Grayson and the legislature to help smooth out the edges and solidify some of the definitions and applicability of the original DFAL bill AB 39. And our concentration there was mainly around stablecoins, definitions, things like what defines best execution, really getting into some of the elements of the bill that were a little broad. And this was in response to a letter from Governor Newsom when he signed the bill back to the legislature. So I recall earlier that I mentioned he has that opportunity to attach a memo, other notification, sharing his thoughts with the legislature in the actions he took. In that particular case of AB 39, the governor said, we need to sign this bill, we need to have consumer protections in place. I agree wholeheartedly, but I think you need to get back together with industry and figure out the mechanics and the fine tuning of this, because this is a pretty big lift, right? We're all of a sudden this whole licensing regime. Let's make sure that we can smooth out the edges and ultimately put it in position to win for Californians. And to his credit, Chair Grayson had no obligation, but felt that it was in the best interest of all parties and in the best interest of political decorum to move forward with that cleanup bill, and it became what is now known as SB 97. Unfortunately, with the passage of Genius at the federal level, at the state level, our lawmakers were left saying, well, we're putting all this time and effort into this, and we really want to do that, only to have some preemption kick in, or that was really what was involved there. So cooler heads, we agreed to put that on a 2-year cycle, so that's going to come up next year. So alluding to your point earlier, you're correct. SB 90, we're going to re-engage on that in the next legislative cycle, which, as I mentioned earlier, begins in January, in this case, January 2026. Other pieces of legislation we're looking forward to seeing, well, maybe not looking forward to seeing, but we will look forward and see them. We anticipate there's going to be licensure that addresses what has been referred to as fraud-induced transactions. So as many people in the crypto space are aware, that unfortunately scams going around, it's not a crypto problem, it's a societal problem. This is impacting banking, crypto, gold dealers, couriers, all sorts of industry, and pig butchering has become a household term in the compliance space now. And what are we going to do, and how are we going to solve that? So here in California, we've had a series of hearings led by what's known as the Little Hoover Commission. So it's this sort of non-binding research arm of the legislature that puts forth research recommendations for the legislature. Generally, the commissioners on there have some sort of political background or have some legislative and public policy background, which is great. That means they understand the process, but they're great subject matter experts and can help dive into that research. So we've had one hearing. We're going to have another hearing scheduled for late October, where industry has a chance to talk about what they've been working on and make some recommendations. All that to say, we anticipate there's going to be some form of legislation, one or more bills aimed at tackling these fraud-induced transactions. The original perspective from the legislature was simply to say, well, if a fraud transaction goes through, the financial institution that facilitated that transaction should refund all the money back to the consumer. In fact, there was an ill-fated bill, SB 505, in the last session, and it was put on a 2-year cycle. So we're going to see it again, some reworking on the language. But in essence, that would have required the refunding of scam victims, prompt investigation beforehand, documentation. And one of the elements of that bill, unfortunately, did not specifically, the financial institution cannot require a police report, which we in industry think is a very sensible step to suggest that person is serious, right? Because we don't want any false claims of fraud. Now, not only is it double fraud, right? Because now you have these fraudsters pretending that there's a fraud, or even facilitating a fraud and trying to make money off of that. But it's taking time and attention away from actually fighting fraud, legitimate fraud that we really want to go after. Let's go help victims. Let's thwart scams. Let's be in front of that. But if we're taking precious resources from compliance, to facilitate these endeavors, that could weaken existing compliance infrastructure and systems, and ultimately have the undesired consequence of making it worse. So that one is really weighing heavy on us right now. Not just in the crypto space, from traditional banks, large banks, in fact, that are very much opposed to that type of legislation. But ultimately, we think there are some opportunities for positive legislation to help tackle this. And that could be in the form of resources for law enforcement, some sort of victim advocacy group within the state that can advocate for victims, point them in the way of resources. Because as one of the commissioners pointed out during our last hearing, yes, this is a financial crisis, a financial problem, but there's also a human element to this, right? There's mental health, and there's someone's livelihood, and the rates of suicide and financial bankruptcy and other elements really weigh heavily on human beings, as one could imagine. Could we put some social services behind that, and is there a way that we can meaningfully contribute to that? I'm not equipped to answer the social services questions, but I can tell you that on behalf of CBAC, we would welcome that opportunity if there's a way that we could help facilitate that conversation or support that. Our industry is wholeheartedly behind that. And, we're all in the same fight here in compliance and public policy. Nobody likes scammers, but I think that there's a better way that we can deal with that. So we're anticipating seeing some legislation around induced transactions and scams.
Very interesting. So yeah, we'll definitely have to have you back on the financial frontier to discuss some of these developments that'll be unfolding here in 2026. In the meantime, I know you're going to be preparing for a lot of this and, working behind the scenes. Now for listeners who want to support CBAC and your efforts, or even, share their stories or become part of the coalition and help shape policy, what is the best way to get in contact with you? And overall, what is the best way for people to get involved working with you?
Yeah, I think the best way to get involved is to engage, start asking questions, and reach out to me. I'm very accessible. Email is preferred, although if you can find any method of communication to get in touch with me, I'll certainly take your call, message, communication. My email address is joe@bitaml.com, joe@bitaml.com. That's on the consulting side. If you're interested in learning more about CBAC and what we're doing to advocate in California, blockadvocacy.com. And my email address is joe@blockadvocacy.com. We have some great resources on both websites. And as you mentioned, Patrick, we've been on your show regularly. We have a regular newsletter, our own blog article section, and we're pretty prolific out there in the ether, sharing content and information. We believe that this information shouldn't be siloed and shouldn't be paywalled, but to the extent we can share what's going on in our engagement and get some feedback. And we've gotten some great comments, whether that's on LinkedIn or folks have reached out to me through email, or stop me in the hall at a conference to happen and say, hey, what about this? Did you think about that? Or what's going on in California? How can we help? Raise a flag. Have a conversation. Shoot up a flare. Find me, and I'm always happy to answer questions. And certainly, if you want to get involved with CBAC, we can discuss what membership opportunities look like. But more importantly, be in a position to answer your questions and get you prepared for what is going to be nothing short of a miss as we lift the curtain on licensing July 1st, 2026 here in California.
Absolutely. Well, I encourage everyone to reach out to Joe. He's a great person to speak to, and he's always up for a compliance and/or policy discussion. And he's extremely informative and knowledgeable, as you can see from this conversation here today. So, Joe, it's been a very informative, powerful conversation. And these policies are going to shape how founders and platforms operate, not just in California, but across the country overall. And at the Financial Frontier, that's our mission, is to monitor these regulatory developments and any aspect of the conversation that is shaping the future of on-chain taxes and accounting. So, Joe, I really appreciate you coming on here as a guest, and we'll be sure to have you back, Financial Frontier, here shortly in the future with more updates as we get more developments. To everybody that's listening, I hope you took value from this conversation. And again, I encourage you to reach out to Joe if you want to speak to him directly. Be sure to follow the Financial Frontier for more discussions like this with leaders that are shaping policy frameworks, legal, tax, and accounting discussions in web and cryptocurrency. Until next time, I'm Patrick Camuso, signing off.